Today is Ask Me Anything Friday. So everybody who's watching live in the chat is able to ask me any questions they want that are related to trading. I mean, if you're going to ask me if penguins have knees, I'm not going to be able to help you out with that. But if it comes to trading related questions, I got you. You ready? So Shane has a question. Good morning, Chris. Do you believe the indicator should match the time frame of the stock or commodity that you're trading? I was listening to Larry Williams trying to understand what that means. So, for example, Shane, great question. Imagine that you are a day trader and you are on the 1 minute charts, right? Do you really care what the weekly charts are doing? Probably not. Do you really care at all what the weekly indicators are telling, what the weekly moving averages, what the weekly weekly RSI or MACD is doing? Probably not, right? Because that's way out of the time frame that you're looking for. Or if you are a swing trader like myself, I trade anywhere from 1 day to 30 days. I mean, that's my window. I can't imagine. I don't even remember the last time I traded last longer than 30 days. And generally, I don't do anything during the day. So between 1 and 30 days. I don't care what's going on the 1 minute chart, right? Would you care what's going on the 1 minute chart if you're planning to hold it for multiple days at a time? Unlikely. And that's what he's trying to say here, right? Is that there's so much noise if you move outside of your time frame or if you zoom too far in from your time frame, that really doesn't make a difference in how you're trading. And because of that, it can lead to over analysis, can lead to analysis paralysis, as people would say. It can lead to a harder way to trade versus just focusing in on your time frame. Great question. Steve had this question. I recently saw a buy signal had triggered, but the overlay was white. Several days later, the overlay goes green. The stock would now appear on my scanner, but way down the list. Do you ignore it? So, Steve, that's a great question. Let's pull up a scanner real quick, and I'll go through that with you. So, pop over here to Outlier Screener. And looking at this, right? So, to his point, if he had set up the overlay indicator, which is just the 10 over 20 price over the 50, let's go to the SPY. I'll show you what I mean. The overlay indicator is there to make your life simple, right? The overlay indicator is for you to look on a chart and within one glance, you can say, oh, okay, the market was trending down over here. The market's trending up over here. It's too easy. We made it too easy for you. The green overlay means it's in a bullish trend. The red overlay means it's in a bearish trend. And the white overlay means it's in between those 2 points, right? So it's trending up or down or sideways. That's all it's telling you here. So to Steve's point, right? Imagine you got a buy signal back here a few days before it went green, and then it went green. It would show up on your screener, but way down the list, because you can organize it by the signal start date, but you can also organize it, Steve, by the overlay start date. So that may be something interesting to you as well, right? Sorting it that way. But to your point, it would probably show up way down here. Now, for me, I only look at, imagine if today, the signal today is T0, I will look at T-1, and I will look at maybe T-2, maybe. But that's as far as I'll go back. If it's anything further than T-2, no, thank you. It's too far for me. It's probably closer to my exit signal at that point than my entry signal. Great question, though. Costa says, would love to see some long put strategies when the market's going down. Dude, super easy, right? Imagine. Oh, I pulled up the wrong spreadsheet. Wait a minute. Did somebody mention Outlier University?
Are you ready? Let's go!
Respect is earned. Respect is never given.
I had to take that. That was not on purpose. I had pulled up the wrong wrong PowerPoint. But to Costa's point, when the Outlier 9 is set up and everything is red, that is when Chris would be looking to buy puts. That's when Chris did buy some puts. I bought a couple puts earlier this year. I was 50-50 on them. One was a winner, one was a loser. I mean, on balance, I was down slightly. However, the market doesn't give a lot of opportunities for put buying in the last couple of years, right? I mean, if you zoom out slightly, let's even go to like the weekly chart. Be a little easier to see, right? The market doesn't give a lot of shorting opportunities. market really doesn't give a lot of shorting opportunities. Now, of course, remember that 40% of the move of your stock is going to be due to the market. So if the market looks like this, there's not a lot of shorting opportunities. However, I mean, you can short any time of day you want, right? But always remember that if the market's pushing up higher, you're working against the trend, and that can make things really, really hard. Let's go to the next question. Richard, are we better with a VIX that is low or high? Dude, I really don't pay attention to VIX. I really don't. So VIX is measuring the volatility, or in all reality, I believe the VIX specifically measures the amount of put buying that's going on, and the fear buying associating with that. So I'm talking about puts, right? When people are buying puts, they're scared, and that spikes the VIX. And the VIX moves up really fast and down really fast. Let's see if we can go to the VIX real quick. Right, the VIX moves up really fast and down really fast. I don't put any weight behind where the VIX is at all. It's just not something that I put in my trading plan. However, you can put that in your trading plan, and it might lead to incredible gains. And I think that's an awesome thing to do if that works for you. Always work on your trading plan. Eric says, is the reason you don't put the half ATR in the market so you don't get pushed out due to daily price fluctuations? Absolutely. Let's look at Apple stock, I guess. We can look at Apple stock. So I had bought Apple stock here, and I believe it was the next day I needed to get out. I thought it was going to close under the under the 50 period EMA, and you can see where my half ATR was about, give or take. Actually, that's maybe not the best example. Let's go to Etsy. Yeah, Etsy ended up being a great trade. It really did. Oh my gosh, was that a great outlier signal. However, I got in, I got out following my plan. I took a small loss, whatever. But if you still stayed in Etsy, look at that. That's an outlier move right there. That's what we're trying to give you. Good gravy. Look at that. And every candle is just green, 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 green. This is what a trend is supposed to look like, by the way. If you get into a stock and it's just, it's going slightly up and it's struggling, that's not where you want to be. This is the outlier move. This is the outlier move. I just got out following my plan early before that outlier move happened. Anyway, going back to this, right? If you see some wicks that come down, right, they can take you out, but then not actually end up being a losing trade. And we've all seen wicks, right? We've all seen wicks that super suck, right? I'm trying to find a good candle with some wicks on it. Actually, I think Tesla might be a good candle with some wicks on it. Yeah, I mean, imagine if I had my half ATR right here, right? Imagine if I had my half ATR right here, and then it comes up by the end of the day, and then it continues with this nice run up, right? That would be super frustrating. And it's happened to me, and it's been super frustrating. So I only look to close at the end of the day, right? It's going to do what it's going to do midday. It's going to do what's going to do midday. And in fact, here's another example, right? It's going to do what's going to do midday. However, if you are holding on to a stock and it has already given you big red lights, says something's not right, three closes under the 10 EMA, and you decide to hold it, don't be surprised if you get a big monkey hammer candle just like this, okay? Does that mean it will crash when it closes under the 10 EMA? No, not at all. But if you are holding on to something and it's breaking down its trend, right? It's breaking down the trend, and we can compare this to Etsy. Let's actually do a side by side. You'll like this. Right? Do you see the difference in this? Do you see the difference in 1 and 2? Number 1 and number 2, right? This one over here. Now, I will be the first to say that my trading plan got me out before the move happened, and that's okay. I don't have any FOMO on this because I followed my plan. But looking at the trend of it, look at how brilliant it is. Look at how smooth it is. Look at how it's not even close to that 10 EMA, right? That's a nice, beautiful trend. Looking at this one, you can see how brilliant and smooth it was, but then it didn't get so smooth anymore. And then it closed under the 10 EMA, and then it took a dump. Pretty cool, right? To see what that looks like between these, and you can be objective in this, right? Don't be anchored to any stock. Don't be anchored to any price target. This is a perfect example of why I do not set a price target. Imagine you bought the stock here at $46 and it went to 49. Let's just say it went to $50. You're like, oh, I'm such a genius. It went up to $50. And then now it's at 62. You wouldn't feel like a genius at that point, would you? No. Or on the opposite side, imagine you bought it here at 317 and you're like, I'm going to get out at 400. Right? 400 is up here. Imagine you bought it at 317 and you're like, I'm going to sell out at 400, and it never hits 400. Both of those leave you in a situation that is not ideal. In this situation, it's, oh man, I feel so dumb because I had a $50 price target and just absolutely trashed through that. It's going to the moon. Versus, oh man, I don't know when it's ever going to get to my $400 price target. Both of those two things are going to lead to mistakes in trading. However, if you follow your plan and you get out when you get your exit signals and you get out when you get your exit signals, some of them are going to be, disappointing because it moved on. But some of them are going to be really great because it moved on the other direction, right? Both of these would be following the plan, but we can't see the future. We can't see the future. That's actually a really, really good example. But to Eric's question, I work at the end of the day because there's more liquidity. It fits my lifestyle. And when I look back at these, if I'm trading at the end of the day, I can pretty much tell you where I got in and where I got out. However, if you're trading at 9:37 a.m., where in the world is 9:37 a.m. on this? I don't know. Where's 11:42? I don't know. Where's 1:14? I don't know. Where's the end of the day? Right there. Where's the end of the day? Right there. Makes it really easy. Makes it really easy to know how you traded in the past as well. Charlotte, I'm a true beginner, focusing on covered calls for the moment. Please, can you explain what needs to happen? What needs to happen when the stop loss is triggered? Okay, so it's a little different on cover calls, right? So let's go back to, let's pick a different stock just for funsies. Let's go to AT&T. Go back to one size. All right, so AT&T is kind of choppy. What about Coke? Coke's kind of choppy. There's Celsius. Here, we can run with Celsius. So imagine you bought Celsius right here and you hit your stop loss right there. Or you actually wouldn't have hit your stop loss in this case. Imagine you bought Celsius right here and then you hit your stop loss over here. Okay, there we go. You hit your stop loss. What do? You close the trade. Right now, you're not going to ever get, more than likely, the exact price of that stop loss unless you set that order in the market, which is a dangerous thing to do, as we discussed earlier, because it could absolutely wick down and come right back up. However, let's say that you got out here. The objective is to make sure that it doesn't take you out, right? Did it come back up? Yeah, eventually. But we don't know when this is going to go back up, right? We could look at AMD, and you could say at any point in time, let me remove all my notes here, remove all drawings. At any point in time, you could have bought AMD and decided to lose money for months and months at a time, right? At any point, you could have bought AMD over and over and over, right? And you still wouldn't be profitable. You still wouldn't be profitable. So if your stop loss is hit, I mean, it's just taking it out, just closing the trade and moving on. I don't do covered calls. I won't do covered calls, but that's not part of my plan. However, if it's part of your plan, could be great. Corey asks, my trading view blocks don't look like yours. Which ones do you use? So inside of our Discord, there are a couple areas that I'd really like to show you. If you're using TradingView, there's a TradingView PineScript section. If you use Thinkorswim, there's a Thinkorswim section. And there's lots of code in there that you can just copy and paste into TradingView or into Thinkorswim. I modified mine slightly because I like these colors for my order blocks. But you can use whatever you want on the colors. Go to settings. You can see the colors right there. I mean, if you really want the color code, I don't even know what the color code is, but that's what I use. And then if you want to see the scripts here, this is what you're copying and pasting in from Discord. It's really, really cool. I use one that's at a sensitivity of 50. You can see kind of in the code right there. Then I use another one at the sensitivity of 28. So go ahead and grab those from the Discord. And I mean, just tweak your colors to whatever suits you, and probably going to look the same as mine. Walking each other home asks, do you ever do options on the IWM? So IWM is the small cap ETF, and we do cover that. In fact, if you go into the screener, then up here to the ETFs, it'll run the screener based on the ETFs. Now, my bullish screener actually doesn't have anything that pops through right now, which is why it's blank. So if I wanted to change this to no selection. Let's see, apply filter. Still not there. Heat map. Let's see, apply filter. Still not there. Overlay indicator. Oh, I probably need to make this. In fact, let me reset filter. That'd be easier. There you go. There's the ETFs. Right. And so the reason they're not pulling through is one reason or another, right? The fear and greed heat maps going down. They have sell signals, whatever the case is. White overlays versus green overlays. So you can filter those down, and IWM is included in that. In fact, if you go to the watch list page, this is cool. I didn't know this was here for a long time. You can see the ETFs by switching from stocks over to ETFs. The bear list, switch from stocks over to ETFs. And then this right here shows you all your sector ETFs. How cool is that? How cool is that? So if you just do ETFs, you can just flip everything over to ETFs and be good to go. But I personally don't. I mean, I will trade it if it pulls through, but elsewise I'm not seeking it out. David, how do I make money, save time? How do I make money and save time with less risk? Well, that's a great question, David. And I appreciate the layups. Let me introduce myself real quick. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk. And if you're ready to save time, make money, and start winning with less risk, you can do it with just 3 easy steps. Step number 1, head on over to OVTLYR.com, pick up OVTLYR for just 82 cents a day. And if you're on the monthly plan, you can upgrade and save 64% off the regular monthly price. Step 2, start using the OVTLYR 9, the 9 itty-bitty baby steps to find your slingshot setup. And step 3, sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. Thank you, David. I appreciate the layup there, my friend. Vin asks, what's your favorite book you read this year? Oh, good gravy. I read a lot. Reading is reading's a really, really great thing to do in your life. I'm currently reading 3 different books. I'm reading Purple Cow by Seth Godin. I don't know if you guys know this, but I'm Chief Marketing Officer for OVTLYR. So my job is making more customers come to OVTLYR, therefore making more people save time, make money, and start winning with less risk. Another one is Building a Story Brand 2.0. If you've read this before, you can pick out a lot of stuff that I do every day in these live streams. This is really good for brand building and community building, which I have really, really enjoyed. And it's a lot of fun to do this with you. And then the other one I'm reading right now is inside of Building a Story Brand 2.0. He talks about Dave Ramsey. I don't know if you know who Dave Ramsey is, but he's a finance YouTuber. But he's one of the OG finance YouTubers. And he was talking about how great of a job Dave Ramsey does. So I actually picked up Dave Ramsey's book the other day at Half Price Books for $11.49. And I've been reading through this. Not that I need Financial Peace Revisited, but looking to see what Dave is doing that I can help you guys do so that we can create a significant movement like Dave has done. So those are the 3 books I'm currently reading right now. Shane, I was listening. Shane, we already talked about that. Senior Wahoo, offset or pellet? He's talking smokers, dude. I'm a pellet smoker all day because, dude, that's so much work to do an offset, right? Where you got to put the wood in, and you got to let it smoke. You got to keep the temperatures right, and you got to increase or decrease the baffle size for the airflow to go through. Or you dump a bag of pellets in, you say, hold it at 200 for 8 hours, and you walk away. It's so much easier. It's like going to your oven saying, I want to bake this in the oven, putting it in the oven, and then calling it a day. Oh my gosh. The pellet smoker is tremendously way easier. Now, my father-in-law, before he passed, he was a huge meat smoker. Oh my gosh. He He was such a meat smoker that he had a trailer. The trailer was an offset smoker. And when he was making his food, he would put it in the trailer, drive around, do his thing, check on it, drive around, do his thing, check on it. It's like you need dedication if your trailer that you're driving around is your lunch. Yeah, that was so funny. Charlotte says, suddenly the chat turns so Texan. Yes, this is my culture. This is my culture. Gary, thoughts on the Minervini trimmed template by Yogi in TradingView. So if you guys don't know Mark Minervini, let me teleport to the library with you. Mark's written a couple books. I think it's this one that it's in. Yeah, so Mark's one of my mentors. One of the greatest traders of all time, if not the greatest trader of all time. And this book here, Trade Like a Stock Market Mentor, I've got, I don't know, probably 60 tabs in this book here. One of them I specifically remember is him talking about the trend template. It's going to take me too long to figure out which page specifically the trend template is on. I bet if I Google it, we could get there real quick. Let's Google it together, because I want to tell you what it is before we look at the indicator. Minervini trend template. There we go. That was easy. This is what's in the book. I don't know specifically what page it's on, but this is what's in the book. I recognize it. Open image in new tab. There we go. First, on Minervini's trend template. This is great. Here we go. The current stock price is above both the 150-day and the 200-day moving average prices, moving average lines, moving average price lines. There we go. So he's over the 150-day and the 200-day moving average. The 150-day is above the 200-day moving average. Now, I'll tell you one thing. Mark trades a longer time scale than I do. I look at the 10 over the 20, price over the 50. Mark is a much longer investor than I am. He's looking for more like 2 to 7 months, maybe longer. I'm looking for 2 to 30 days, right? Different thing. But as Deep Thought said right there, 10, 20, 50 works on all time frames because math is universal. So, but the question was Minervini's. So let's go through this. The 200-day moving average is trending up for at least a month, preferably 4 to 5 months on most cases. The 50-day, is above the 150 and 200-day, right? Remember, it's time frames. And to Deep Thought's point, it's math. If this is the 10-day and this is the 20-day and this is the 50-day, he's saying the same thing, but his is longer in duration than mine. 10 over 20, price over 50, 50 over 150, and price over 200, basically. The stock is above the 50-day moving average. Wow, who would have thought? 10 over 20, price over the 50. It's almost like I know what I'm talking about. The current stock price is at least 30% above its 52-week low. We are not buying stocks like AMD. We are not buying stocks like AMD. No way. Many of the best selections will be 100% higher, 300% higher, or greater above the 52-week low before they start their big runs, right? So let's look at Etsy. I don't know what Etsy looked like, ETSY, but let's take a look at it. Look at this. It's already up from its 52-week low. Actually, not as much as I thought it would be. From its 52-week low to here, it was up 17%. It was up 17%. So, like I say, we go on different time frames. We have different scales, but you can see this is what we're looking for. We want to be buying stocks that are going up in price, not buying stocks that are going down in price. The current stock price is within at least 25% of its 52-week high, meaning wherever the 52-week high is at, he wants it close to that point. So in fact, on Etsy, so June to June, it's within how many percents? 25%. So it was June to June. Let's say from here to here. That's within 21%. Within 21% right there. So it would have been there. By the way, Etsy running up right into that order block. It might struggle once it hits 63. And then lastly, the relative strength ranking as reported in Investors Business Daily is blah, blah, blah. We don't worry about that. Point is, Minervini's trend template is very similar to mine, probably because I worked with him. Mine is on a more consolidated time frame. His is on a longer time frame. Both of them achieve the same goal, which is getting you into a stock as it's moving up. Now, looking at the question was, what do I think about the indicator in TradingView for it? I've never used it. Let's use it right now. Let me remove 9 drawings on Etsy. Let's go to indicators. Let's go to Minervini. Trend template by Yogi. Look at that. Oh, cool. It pulls up a little thing right there. That's neat. A little binary equation here. Yes or no. I like that. Let's see if we can find one where everything passes yes. Okay. Tesla, no, AT&T was pretty close to that. Let's go to Tesla. You can see the layering is not quite. Hang on. Let me move this up. Visual order, bring to front. There we go. This is cool. I like this. Let's look at SMCI. Let's look at SoFi. Let's look at Qs. Let's look at Palantir. Let's look at NVIDIA. Microsoft. That's a really cool little thing down there. That's a really cool little thing down there. And Deep Thought has built something like that for us as well. You can grab that inside of the TradingView scripts as well in our Discord. So Deep Thought has done something very similar to that. I don't use all of that because I don't want to see all that, honestly. I like just being able to see the order blocks, just the order blocks themselves and the moving averages on the chart on their own. So there you go. I like it if it works for you. If it works for you, that's the important part. Eric, how's the outlier signal return calculate? Oh, this is a really easy question. If you go into here and you pick any stock, I'm going to pick any stock at random. I do not know how these results are going to be. So I'm going to go here and I'm going to go to IR. I don't know what IR is. I don't know how it's performed historically, but we're going to pull up the performance summary. The performance summary is measuring just the difference between the buy and the sell signals. Now you can see right here that buy and sell signal specifically is not going to have a positive outcome. This buy and sell signal, however, is going to have a positive outcome. So performance summary shows outlier at 94.64% return just on the buy and sell signals. You layer in the OVTLYR 9 on top of that, when all the momentum is moving in your favor, it's going to be tremendously higher. I don't know exactly. I think that's part of the plan is to have more data for the OVTLYR 9, but I don't know when that's going to be available. Also, the OVTLYR 9 is going to be replacing the master key over here at some point, and you'll be able to see right away if it's set up for you. All of the slingshot setup all in one spot, and it's going to make life so much easier, and it's going to be so cool. And then over in our screener, it should just be like a single tick button like that to let you know if OVTLYR 9 set up. It's going to be awesome. But that's how the OVTLYR signals are returned. It's just, you know, the difference in the buy and the hold with no other analysis layered on top of that. Andrew, question for you. A certain person told me that the sweet spot in buying calls is a 25 delta with an expiration at 45 days. What's your take? Ooh. Andrew, why are you going to make me so mad so early in the morning? Okay, hang on. I need a coffee for this one. Somebody told you the sweet spot is a 25 delta with 45 days to expiration. Okay, let's compare what I would buy to what this person would buy. I don't know who that person is. Doesn't matter. Doesn't matter. Let's go to a really liquid stock. So we're not going to have to worry about liquidity. So let's go to Tesla. And we're going to look first at, in fact, I think I'm going to need an Excel spreadsheet here for this. I think I need a spreadsheet for this. Hold tight. New sheet. All right. So let's do the OVTLYR way. The OVTLYR way versus the other guy way. Okay, so expiration, strike, price, extrinsic, intrinsic. I don't care if I spelled it wrong. You know what we're doing here. Okay, next, let's go to this. Oh, I can't pull it up side by side. That's annoying. Do something like this. Okay, and let's make this a little smaller. Okay, here we go. This is the OVTLYR way of doing things, which in my opinion is the correct way, but I'm very biased. I'm very biased. All right, so let's say that I'm going at the 21 days to expiration. So I'm looking at June 27. Okay. And I generally go for the 80 delta, the 260 strike. And in fact, let's add a delta column. Insert delta 80. All right. The price of it is currently sitting at, let's call it 50 bucks. It's $49.95, give or take. We'll call it $50. We'll round that one as well. Extrinsic value. Oh, let's do current price of the stock. So we can actually get real numbers on here. You'll love this. So price of stock price. Current price of the stock is $298.25. The extrinsic value, or we need to calculate intrinsic first. So the intrinsic value is taking, give me a break, hang on. No, you hate when stupid Excel formulates things, right? There we go. Intrinsic value is the difference in the stock price and your strike price. So 38.25 should be pretty much right here, right? It's moving around. We can all see that. But that's your intrinsic value. Your extrinsic value is the difference in those. So the price of the option was $50. So the extrinsic value is this minus this. Look at that. We just did math. And that's going to be roughly, oh, it's changing around a lot. Now it's 47.45. No problem. Check it out. We can, 47.45. Look at that. Look at that. Got really close to it now. It's moving around a lot. The market opened 3 minutes ago. So give me a little bit of grace in that regard. And let's make these all money dollars as well. Okay. Now, this other person who shall remain unnamed, we'll call him Voldemort. Voldemort, we'll go write this down. Old Valdy the Baldy, Voldemort said, go 45 days out. So we're talking July 18th, so 7/18. The current price, we're going to have to modify this. $296.50 is the same, right? We can agree to that. Current price is the same. And let's go to the 25 delta. 25 delta. So I have to go way over here to July 18th. To the 25 delta call, which is so far out of the money. So roughly here, the 327.50s. So where'd that go? Oh, delta. Delta is a 4. My bad. More like this. 307.50s. Strike 307.50. The delta 25. Price of the option is $2.24. It's cheap for a reason, by the way. It's not cheap because they're trying to give you a great deal. It's cheap because it's a crap option. Extrinsic value and intrinsic value. Calculate that. And the price, hang on, where'd my math go wrong here? The extrinsic value is 0. The intrinsic value, oh, I'm sorry, no. The extrinsic value is the entire thing. So it's this. And there is no intrinsic value. There we go. Now, looking at these two options, right, the outlier way of doing things is already giving you an option that has value. If it expired today, my option would still be worth $36. Even though the price of it is $47, there is $10 of extrinsic, and I would still have $36 of my investment left. If this one expired today, all of it's gone. All of it is gone. This quarter sitting on my desk right here is worth more in value than this 25 delta strike. Okay? That's what I mean by it has no value. It is worthless. So between those, a huge difference here. Now, what does that actually look like? It looks like this. If I have a stock, or if I bought these two options, this is Voldemort's option. This is my option, right? My option has, we'll just use this number here because it's on the page. My option has approximately 11% extrinsic value. Extrinsic value goes to 0 on every stock, on every option, on every strike, on every expiration, every single time. It always goes to 0. Now, if you're buying the one that's out of the money, all of this will eventually decay unless it goes into the money. On mine, only a portion of it, a small portion of it by design will go into, it will start to decay. Now, because of this, my in the money options have a very small, very steady, very linear time decay. This one that's out of the money, by every single day, it's losing more and more and more. And then as it gets close to expiration, it just basically falls off a cliff. Both go to zero on extrinsic value, and they'll both do that at the same time if they're on the same expiration cycle. But one of them is only 11% of the price will go to zero. The other one is 100% of the price. The out of the money options are lotto tickets. The in the money options are leveraged investments. Right? Very, very big difference here. One of these actually is an investment. It has value. The other one has nothing. The other one is a hope and prayer and a dream. The other one needs the stock to go up to hit this value here. The one that I'm buying already has value to it. So there's so many reasons, Andrew, why I couldn't ever do that. I mean, I could be here for an hour just specifically talking about that. All right, now I have gone through all the questions that I saved earlier, so now I get to catch up with you guys. So I'm scrolling through looking for questions. Kasha says, would it be possible to get OVTLYR update even earlier in the evening? I mean, realistically speaking, it updates at 10:30 p.m. West Coast time. The market closes at 1 p.m. West Coast time, I believe. So if it updated at 5 p.m. West Coast time, it's not going to make a difference. But it updates once overnight. I mean, it's not going to make a difference if it updates 2 hours earlier or 2 hours later because it's still going to be overnight. Corey, in the TradingView scripts in the Discord, can you show? Dude, listen, Corey, I would love to help you out. That is not my strong suit. There are other people in the Discord who will be more than glad to help you with that. All I know is copying and pasting. That's legit the extent of my coding knowledge. And that's all I can do for you, my friend. Deep Thought says, a notice. What percent on the bull list is at when it crosses the 10 EMA? Choppy. No. Oh, he's saying notice the percent at the crossover on the 10 EMA. Okay. I see what he's saying. So Deep Thought's been doing some analysis. He's trying to see where these crossovers occur. If it's a crossover really low on the breadth crossovers, where it's gone from like a significant amount of sell signals and then it crosses over very low versus a very high crossover like it did right here. That was a super high crossover. Now you can still make money on that. And I made a lot of money on that, by the way. I don't really worry too much at what point it crosses over between 100 and 0, just that it does do that crossover. However, build that into your trading plan. Build that into your trading plan. Let's see. SJ, TradingView, what are your settings used in intervals? I just do the daily charts. I always just use the daily charts. That's my wheelhouse. That's where I live. Oh, look at that. AI can help you run Monte Carlo easily now. I did not know this. Very cool. Oh, y'all are talking about the spreadsheet. Yeah, fair point. Many people cross that line. Yeah, I just didn't feel comfortable sharing that out there. But okay. That's a cool idea. I never thought about using ChatGPT for that. Y'all should definitely check that out. That's super cool. ChatGPT is already working on it. Cool. Carol asks, when are the uni lessons available and what's the cost? Well, we already did my spiel earlier, but OVTLYR University happens every Tuesday and Thursday afternoon. I'm teaching you literally every single thing that I know about trading, and we have a full 100% money back guarantee because it's free on YouTube. So if you want a refund, it's free. So you're not going to get one. But the point is that I'm giving you literally everything for you to be successful in trading. But probably half of the people who are going to watch will not even listen to it. It's going to go in one ear and out the other, right? About a third of okay, if we do half, let's say another 25% are going to take it. They're going to manipulate it. They're going to adulterate it. They're going to ruin it, and they're going to lose money, and they're going to say it's all my fault. I'm telling you, that's how people work. Half of them not even going to listen. They're going to listen, but they're not going to hear it. It's like when you go to church on Sunday, right? And the priest or the preacher's up there, and you're totally like zoned out, like, okay, let's get this over with, right? Half the people are going to do that. It's just what it is. 25% are going to take it. They're going to say, oh, Chris means this, which means I should do this instead. But Chris doesn't know what he's talking about. He's just a random guy on the internet. And then they're going to lose money. And then they're going to come back and say, Chris, you lost me so much money. You're so stupid. I've already gotten those comments. Then the last 25% are actually going to listen. They're going to actually understand what I'm saying. They're going to go make money with it, and it's going to be awesome for them, and it's going to change their lives, their children's lives, and all of their future generations. You decide where you want to fit on that curve. You decide, because I'm giving you everything. I cannot give you more, but you decide where you fit on that curve. Hopefully you're going to be on the right-hand side of the curve. Hopefully you're going to be over there. But that leads me to where I wanted to go earlier as far as the Monte Carlo simulations. So this is really cool. This is a spreadsheet that I bought from another YouTuber, and I don't feel comfortable sharing it with other people because, you know, he worked on it. He deserves the credit. If you want to go get it, it was from the Financial Wisdom YouTube channel that we watch a lot. Dude, I bought this like 5 years ago. It'll probably cost me $5, and I thought it was really great at the time. But this is so awesome for taking your theoretical, back-tested trading plan and actually showing if this will be profitable. So what I want to show you here is when I was trading selling options, I had an 84% win rate, but I would lose $900 every time I was wrong, and I would make $100 every time I was right. Let's just use one lot numbers here. Makes it easier. Okay. This has a negative expectancy right off the bat. And then when you run the simulations here, it does 500 versions of 365 trades. It crunches a ton of data. My absolute best case scenario, my absolute top bestest case scenario, I could make $1,500. The average scenario, and we're talking like these are one lots here. The average scenario was losing $21,000. The worst case scenario was losing $50,000. This is what happened to me constantly, right? I lost over $200,000 with an 84% win rate. Let that sink in just for a moment. Me, being the genius that I was, had an 84% win rate. How could I have done this wrong? Yet, I lost over $200,000 with this style of trading. Bonkers, right? Bonkers. But it gets even worse. The people who I learned from, the Voldemorts of the past, for me, they told you the max you could win is 100, but you're not going to realistically get that 100 because you got to hold it until expiration. So why don't you just take half of that total profit, right? Cool. Let's see how much worse this gets. So I just cut my potential winners in half. Yeah, Charlotte. Exactly. I just cut my potential winners in half. Now my best case scenario, my absolute number one best case scenario, if everything was executed correctly, was an $18,000 loss. This is why it's so important to understand your numbers. Okay. This is what I was going through. It's like, I will never make money doing this. There is no mathematical possible way. If my best case scenario is losing $18,000 on one lots, that I can make this work. Now, when I started working with Market Wizards, when I started working with Mark and Mahesh at OVTLYR, when I started making things click together, these are my results. Win rate of 69.39%. I bet I could do this. Here we go. 69.39%. This is 2024 numbers. These are real numbers. This really happened to me. The average win, 18.97. So let's do 1897, right? Big boy numbers here. Minus 1790, okay? Now, as you can see, these are not all that different. And really, these aren't big numbers either. These are not all that different. But I had a 69% win rate. Let's run those simulations. It's running down here. Let's run these simulations and let's just look at the difference here. Going from my best, very best possible outcome of losing $18,000 to my very worst possible outcome of making $168,000. Let that sink in. One, selling options with an 84% win rate. The very best outcome I could make is losing 15 grand. 2 with a 69% win rate and not even all that big a difference between my winners and losers. My worst case outcome, $168,000 win. Pretty sweet, right? This is why you need your numbers. This is why you need to understand your numbers, because then you can run the math and you're like, whoa, okay, this strategy, which I thought was great with an 84% win rate, really, really sucks. This strategy with a 69% win rate is bonkers. This is where you want to get to, where your worst case scenario is still profitable. Now, I've only put on 12 trades so far in 2025. So these numbers aren't the most realistic. The more data you get, the more realistic the numbers get. So I have for 2025, 58.33% win rate. My win rate is worse this year. So far, 58.33. My average win is 51.42. My average loss is negative 21.52. Now you'll notice here that my average win is more than double the size of my average loss. My win rates come down, but my average win is significantly higher this year than it was last year. So far. Let's run these simulations. In fact, let's take a little screen cap of this. Take a little screenshot of this so we can compare 2024 results to 2025 results. Click the run the simulations button. Okay. I think OVTLYR is even better than it was last year. If my worst case scenario is making $600,000 on these type of returns, and my best case scenario, like we're not talking, making $50,000 a trade. We're talking making $5,000 a win, not 50,000, just 5,000, hitting over $1 million in 365 trades. Now, of course, that's every single day. But look at this. Look at the difference in this. This is OVTLYR 2.0. This is OVTLYR 3.0. Crazy numbers on here. This is why I am the most confident trader you are going to come across, because I have data to back up what I'm doing. My question to you, do you have data to back up what you're doing? Do you have the data to prove what you are doing is going to work? I hope so. Francis, if there are X number of trades that light you up, would it use 100% portfolio? Would you go for it? Absolutely. Absolutely. Because my trading windows are small. When everything lines up on a good case, it's 2 weeks. On an average case, probably 1 week. I mean, recently when I was making money, it was a 6-day window. 6 days. If I miss those 6 days, that's let's say 6 figures. Let's just use 6 figures. 6 figures in 6 days for me. So if I miss that, that super sucks, right? So if trades become available, you need to be available for them. However, if you're out on vacation, if you're out doing something else, if you are distracted, don't trade. I know that sucks, right? Especially because you're like, wait, but I can make so much money in so little time. If I miss those trades, then I've missed the opportunities. Yes, you're very right. But if you can't focus on your trades, don't even bother trading. Right? My best example is when I went to Disney World with my family, and I couldn't be present for my family because I was stuck in my phone dealing with trades. What's more important to you? To me, it's family, because what I do is for them. I'm leaving a generational legacy behind, multi-generational legacy behind. But it doesn't matter if I can't be there for them at all. Philip, if you were training a small account, I assume trading, if you were trading a small account, would you start out with spreads or just take the long stocks? I've heard you like math, so this seems like a good question. I'd be buying the options, dude. I would be buying the deep in the money calls like I do. You may not be able to buy as many, but that's what I would do. And maybe not buying the 80 delta, maybe buying the 70 delta where it's a little bit less expensive. Maybe even the 65 delta where it's a little bit less expensive. But then you'd still be on the right course. But a spread limits your profits, right? You don't want to limit your profits. You want your profits to be unlimited and then only get out when you get your exit signal. So, bro, I would stay as far away from trades as possible. There's no world where I would want to trade spreads. Let me can go through this. Okay. Nico says, why would catalysts not be the 10th outlier? Earnings, acquisitions, etc. So I avoid catalysts, right? I avoid catalysts like the plague. The earnings, whenever they come out, if I can avoid them, I will not trade them. I've only traded one earnings in the last 4 years or so, and that was by accident. I didn't realize they were having earnings that night, and it worked out fine for me. The stock was up. It was Bank of America. It was up 5% the next day. Wonderful, smiling down from the market gods upon me. However, it could have been down 5%, and I would be, nothing would have changed from what I would have done because I held it through earnings, but yet the outcome would be tremendously different. So I remove that. And then I don't have to worry about big moves up, big moves down. All I have to do is follow the trend. Susan says, thank you for showing the SPY chart in 3 weeks of resistance. Investors Business Daily, IBD, for the last 3 weeks that we should be 80 to 90% in stock. And we are in a super trend. You put perspective, stay in cash. Yeah. Wes asked, do you ever trade futures? No. So as much as I love leverage, and futures give you great leverage, I cannot sit there and watch futures. I've tried in the past for day trading. It does not fit my personality. I assume that's what you mean. Can you go long futures and hold them for a while? For sure. Just understand that futures are tremendous leverage. I mean, I was using Trade-Evate previously when I was trading futures, and I think it was like I forget what it was, but you could get like 500 to 1, 100 to 1, 50 to 1 leverage. It was crazy. Rick, please can you show how to long put and what delta? Sure, Rick. So first off, by the way, Rick, we're local, bro. We should hang sometime. I would start with making sure all OVTLYR 9 are bearish. That would be my how-to, right? Make your OVTLYR 9. Hang on, I'm getting to the slides. Make your OVTLYR 9 all red. All of them, Rick. All of them. Not 7, not 6, not 5, not 8. All of them, Rick. Make them all red. Okay. Now, once they've all lit up red, then let's use Tesla, for example, right? So at the money is right here. At the money is basically the closest strike you can get to the current price. Current price of Tesla at this very moment is $293.50. The current strike here that's closest to that is $295. I would go to 21 days out. I would look deep in the money on the right-hand side. These are puts, these are calls. And then I would go around the 80 delta here. Now this is really expensive, but that's where I would go. I would buy it and I would wait for an exit signal. I mean, honestly, like that is the how. That is the how. Sean asks, if everything lined up with the OVTLYR 9, but the performance summary didn't look good in the past 3 or 6 months, would that be a reason to pass or take the trade? Okay, that's a great question. I'm glad you brought that up, Sean, because I don't like to look at, I like more data is more better. Okay, so if you go to performance summary, and this is still on IR, remember it had a 94% return. This is on the max. This is on 49 buy signals, right? Now, keep in mind, the more data you have, the more better it gets. Let's go to the 3-month time frame. In 3 months, there were 2 buy signals, just 2. So if you base your trading plan around 2 instances, N of 2 in statistics terms, that's not enough data to draw any sort of conclusion. If you go to 6 months, there were only 3. That's not enough data to draw any sort of conclusion. If you go to 1 year, there's been 9. That's not enough data to draw any conclusion. That's why I only look at max. I don't look at anything else, because this is going to give you the most number of signals, 49, with a 94% return. Let's go. I'm going to pick another stock at random, CRS. This is the Chris of stocks. What is CRS? I don't even know what this is. I never even heard of it before. CRS is Carpenter Technology Corporate. Oh, this is probably where Jesus worked. Carpenter Technology Corp. Probably where Jesus worked. Let's go to the performance summary here. 456% at random. Okay. However, that's over the max time frame with 87 buy signals. If we go to the 3-month time frame, there's only 4 signals. Go to the 6-month time frame, there's only 6 signals. If we go to the 1-year time frame, there's only 16 signals. But still, 106% is crazy in 16 signals. So, that's where I would go to. It's just as long as you possibly can. That's going to give you more data. Justin says, I know Mark is reducing the noise on the spy signal, which he is. And by the way, fantastic avatar over there with the monkey and the hammer and the hashtag sit and cash and don't F up. I love it. Do you think that some noise is caused to miss out on potential trades? No, that is why the OVTLYR 9 is there. OVTLYR 9 is there to reduce the noise. There are some stocks like Celsius is actually really bad with noise, CELH. But Celsius got a huge buy signal and made a buttload of money. Right? Celsius is running like crazy, and I got a buy signal a few days before this run. However, a very, very choppy buy and sell, buy and sell, buy and sell, buy and sell. Mark is actively working on reducing this noise right here. But if you put OVTLYR 9 together, you don't have to stress on it because it's going to line everything up for you. It's going to reduce that noise already without trying. Runner is trading options with margin a good idea. So with options, you won't be able, at least as far as I know, I've never been able to. Let's say you have a $50,000 account. With regular stock trading, you can buy at least twice. Some brokers are different, but the brokers that I've used, they'll give you $50,000 to work with, which is your own money, and then $50,000 more, which is margin. With options, it's usually just the amount that you've deposited that you can work with. Your broker may be different, but I've never seen a broker that's allowed me to trade more than what I've deposited with. Or, obviously my actual gains instead of using their margin. Is it even possible to get a margin call? Oh yeah, I've had 2 margin calls in the past. Margin calls sound really scary. A margin call is where you don't have enough in your account to cover what the trade is worth now. You did at the time, but something has happened, and now you don't have enough to cover that. I don't stress on those. When it happens, just close the trade. Okay. The reason that they're giving you the margin call is they're saying, if you want to hold this trade, you need to deposit whatever the amount of money is. I don't know how much. Let's say that you get a margin call for $32,000 and you have a $50,000 account. On the outset, you can be like, oh my God, I don't have $32,000. What am I going to do? Or I'm not going to hold this trade. If it's not working out, that's when you're going to get that margin call. If it's working out, you're not going to get the margin calls. Everything's working fine. It's only when things aren't working out that do you get margin calls. Oh, I got a margin call. What do I do? Just close the trade and move on. Take your loss because you're already in a loss right there, or you wouldn't have gotten the margin call, and just move on. I think you exit your trades when exit signal happens. So it's always before that. Bro, if I'm getting a margin call, which I can't with long options, you won't be able to get margin calls with long options because of the very nature. Let's say if I bought, let's say I have a $50,000 account, I bought 50 $10 options, which would get me right at that $50,000. Okay. You can't get a margin call because you can't go over the amount at any point in time with those long options. It's impossible by the structure of them. But let's say you were selling options, which is what happened with me, and you got assigned on those options that were sold. Now the broker's like, okay, well, if you have all these shares, you need to give me more money. Give me money. Give me money. Or you can say, okay, never mind. I don't want those shares anymore. Close the trade. Andrew, do brokers generally require you to have enough money in your trading account to enable you to? No, they don't. That is when you'll get the margin call, though. This is a great question. So you can trade options. Let's say you are trading options on Tesla In fact, let's go use real numbers. This is a really good question, by the way. Really good, really good question, Andrew. Let's say we're trading Tesla. Okay. Let's say that we have a $10,000 account and we bought 2 of these. Okay. So that would put us right at $10,000 between these 2. So this would cost me roughly 48, let's say 48.50. 48.50 times 100, okay, times 2. This is the actual cost to me, $9,700. I have a $10,000 account. I spent $9,700 on 2 Tesla options. Okay, cool. If that's no issue. There's no margin issue with that whatsoever. You're good to go, Sean. Or was it Andrew? Andrew, you are good to go at this point. The broker's not going to care. However, let's say you decide to exercise the options. Now you need to get 255 times 100 times 2 means you need $51,000 in capital. Okay. They will give you a margin call. If you decide to exercise those options, they're going to say, well, that's cute, but you don't have enough money in your account. Margin call. But if you just stick with the options, you don't exercise them, no issues. No issues at all. That's a really, really, really good question. I'm glad you brought that up. Perfect timing, by the way. That was like great sequential timing on that. Let's do 2 more. Let's do 2 more. Ahmed asks, can you show how to use trading blocks or trading trading blocks? Outlier blocks. Outlier blocks / order blocks. It's really easier than you think. So after you've got these put into your charts, whatever charting platform you use, if you see it running up into this, if you see it running up into the order block, it usually acts as really strong resistance. This is not the best example because it pushed through this. But let's find another one. Let's find another one here. Wasn't SoFi that has them? Yeah. So SoFi is a great example. So SoFi had this order block, and what I found is that the older they are, the harder they are to break through. Right. So we'll do SoFi and then we'll do HIMS. I think HIMS also had a good one. This order block was back in 2021, December of 2021. The very first time SoFi came up into this area, by the way, receipts were on YouTube when I said, do not buy it right here. It had earnings and it got monkey hammered right back down. Receipts are on YouTube, absolutely, on January 24th. I said that. It came up to here, got monkey hammered back down. Created another order block right here. The second time it tried, it went into this order block right here, got monkey hammered back down. Now it's stacked 1, 2, 3 deep. Now it's stacked 1, 2, 3 deep. So order blocks work as great support and resistance. If it's above it, watch for it to be rejected. If it's below it, watch for it to bounce. Here's one. Here's one where it bounced, right? It came, actually, here's another one right here. This was created, came up, came down to this level, and bounced right back up out of it. Now, it pushed through and it closed that order block here. Another time, it created one here, came down, bounced, and then closed under it. So order blocks are really cool. Let's go to HIMS. Oh, I thought that there was going to be one from here over to here, but no, there wasn't. Let's see if there's one more. Tesla has some really good ones on bottom. Yeah, look at this order block that was created down here. So as you can see, it pushed through several of them right there. It's not saying it cannot do this, but it makes it a lot harder, right? So there was an order block here that was created, pushed up, came up into this order block, was rejected, okay? Pushed up again, was rejected. Pushed through several, all the way up, okay? Came up into here, created a new order block, came down, tried to push up again, rejected. Came all the way back down. What you'll notice is that it bounced here, it bounced here, it bounced here, it bounced here, and it's bounced inside of this one 1, 2, 3 times. Not only this one down here, 1, 2, 3, 4 times. Pretty cool, right? Pretty cool, right? All right. Oh, David says SMCI. Does that have good order blocks? Yeah, look at that. So this one right here, from August of 2024, the very first time it came up into there, rejected. Now, why is that? Why is that? It's because people want to get out of this stock. And they're like, oh my gosh, I'm holding on to this stock and it's costing me so much money. And the very first time it comes up into here, they're like, I have to get out of here as fast as possible. I need my money now. I'm back to break even. Get me out. Boom. Came right back down. That's the investor psychology behind these. Last question here. Last question. Just scrolling through here. Oh, a great trading psychology question. How should we stay on our strategy plan and not change it in the way due to noise or psychology? If I had a clone of mine, I would have been punching him due to changing my plan and lost big. So this is a great question for you, Theo. What works for me is having the data, right? If your trading plan is only as good as the data that backs it up, right? So it's one thing to say, okay, I'm only going to take trades with a 5-to-1 risk to return. That sounds cool. How in the wide world of sports did you come up with that idea? I mean, realistically speaking, do you have data that shows, okay, if I do X, Y, and Z, historically, I have a 5-to-1 risk to return or return to risk, whatever the case is. 5 times the return to 1 risk. If you don't, then why do you think that you can trade that in the first place? Like, what do you have to support that? That's just it's just some random guy coming up with random numbers. But if you can conclusively, and I showed that earlier, go through a series of trades, like I have my 2024 trades, I have my 2025 trades, and I can say, okay, realistically speaking, taking these numbers and plugging them into future scenarios with my win rate, my average win, and my average loss, what would that end up for me? If your worst case scenario is you make so much money, then that's a plan to follow without questioning. If your best case scenario is a plan where you're going to lose money no matter what, even in your best case scenario, you probably should be working on that plan. But for me, it really all boils down to confidence in the plan that I can prove, that is demonstrated, that is not subjective, but it is real, factual, and numbers based. That's what I would say. So listen, if you're ready to save time, make money, and start winning with less risk, click one of these 2 videos, and I'll see you on this afternoon's live stream. We'll talk soon.